Hi everyone, good afternoon. Am I audible to everyone? Thanks for being here. Excited for this panel, which intends to give a slightly comparative lens to the regulatory discussion. We'll talk about themes from with a focus on APAC, but try and compare the trends in APAC with trends globally. And we have an excellent gathering here where Dr. Kim is an ex-finance minister, he's an ex-World Bank expert, and now he's publishing research with Hash on the Web3 space. And we have Rahul from the industry, who's representing the leading company Ripple, which aims to solve cross-border payment friction. So hope to get a good mesh of perspectives in this panel. Starting off with Rahul, there are basically three waves of regulatory trends we're seeing. One is the US regulatory enforcement approach, where very little is codified expressly, but it is more about how you interpret existing laws, securities being the classic. On the other hand, you have Singapore, which is taking an approach of amending its laws like the Payment Services Act and other laws to extend to the industry. And you also have Hong Kong, Japan, and in the Middle East, you have Dubai and Abu Dhabi. And you have ultimately MICA, which has come up with the omnibus framework, which has gone for the fully codified approach. So it's kind of an amalgam of enforce existing law, amend existing law, or create a new law altogether. How do you have a particular view on what approach is preferable from the perspective of an entity that operates all around the world?
Thanks, Jaideep, and pleasure to be here. Thank you very much for having me here. Just to give you some context, for those of you who aren't familiar with Ripple, we're an enterprise blockchain company focused initially on solving for frictions in cross-border payments, but also looking at liquidity, custody, and tokenization. So essentially being the infrastructure layer for the Web3 and crypto economies. And in my role as Policy Director for Asia Pacific, this is what I do. I speak to regulators, I speak to the industry and see what is the best approach, what is the best framework for the jurisdictions in the region. One thing to note is that everyone looks at Asia and APAC as this monolithic whole, right? You've got the US, you've got EU, and you've got Asia. The reality is that Asia is an amalgam of multiple jurisdictions with multiple priorities, sometimes competing, multiple regulatory frameworks, multiple regulators in many cases as well. So there isn't really a one-size-fits-all approach that you can say is best for the region, right? What you can do is learn from what other jurisdictions have done and apply those best practices. So if you look at Singapore, for example, Singapore and Japan, I'd say, were very early on looked at, how do we regulate digital assets? And both amended their Payment Services Act, I think Japan slightly earlier in 2017, Singapore in 2019, to recognize payment tokens. Right? So in Singapore, we call them digital payment tokens, or DPTs. And essentially in Singapore, we have the existing MPI licensing framework, so the Major Payment Institution Licensing Framework, under which DPT services is one licensed activity. Now Ripple, we're licensed in Singapore. We received our license in October of this year. So we have an MPI license for DPT services, right? Japan followed a similar approach where there is a licensing framework in place. Slight difference is that Japan has sort of delegated to a self-regulatory authority organization called the JVCEA, which is the Japan Virtual Currency Exchange Association, to enforce the regulation, right? We look at Hong Kong, slightly different approach where the approach that Hong Kong has taken is slightly narrower, and they're looking at platforms. So if you're a trading platform or if you're an exchange, there is a licensing framework in place for you. You look at Australia, they're going through the motions right now. We just finished a consultation with the Treasury. They're looking at essentially where the nexus is to custody being within the regulatory framework, right? You look at other jurisdictions like Indonesia and Thailand, there are licensing and regulatory frameworks in place for platforms, right? So all of this, going to say that, look, there is no perfect one-size-fits-all solution that you can copy-paste. There is what's best for your jurisdiction, and that's an exercise that you need to go through. And that involves public-private consultation, working closely with the regulators. I think it's incumbent on the industry to inform the regulators as much as it is for the regulators to inform the industry, and work together to build a framework that's appropriate for the jurisdiction.
Yeah, makes sense. And I think one thing that ties these trends together is the discussions at the international multi-stakeholder level with the G20, IOSCO, and FSB papers. So possibly some common points could emerge there. Dr. Kim, moving to you, you've had a hand in the South Korean framework around crypto assets. Could you give an overview for those here who are not aware? What is the landscape in South Korea for crypto assets?
Yeah, South Korea has been one of the most important, markets in cryptos. Let me share two policy instances we had, which have some implications for the existing regimes. While I was working at the government in 2017, South Korea was called as a ground zero for cryptos. And there was a huge crypto frenzy going on. And during that time, South Korea accounted for around 20 to 50% of global trading. And the so-called kimchi premium, which is the price difference between cryptos traded in Korean exchange and in global exchanges, reached up to 50%. So you can, imagine how the frenzy was, how extreme the crypto frenzy was, and it caused, great social, political concern, and government was asked to step in. And during that time, I was the number 2 at the Financial Services Commission, vice chairman of the Financial Services Commission, and two lines of thought, emerged. The first line of thought was Ministry of Justice and Prosecutor's Office. They regarded crypto as a crime akin to such as fraud and gambling. So their stance, advocate close of this complete close of exchanges and complete ban of crypto trading. And the commission I worked for, the Financial Services Commission, suggest the alternative approach, and we were against the complete ban. So our struggle was, our difficulty was, there was no the regulatory framework or legal basis for cryptos back then, and you have to do something. You have to regulate, cryptos, even though cryptos, you don't have regulatory framework for it, and while the cryptos are operating outside your purview. So what would be possible in those circumstances? And we had multiple meetings, and we had a very close dialogue with the industries, and FSC came up with a regime called real-name verification system. Before that, since crypto was not subject to regulatory framework, a person can set up multiple accounts. A single person can set up as many accounts as possible, and that caused rampant speculation and illicit activity. So what FSC proposed was making mandatory to have a single account which should be verified at the bank. So it was called the real-name deposit and withdrawal system. And there was one more requirement. We asked the banks. We asked the banks to open account with crypto exchange, which passed information safety management system. So it's a kind of, in a way, outsourcing your regulation through indirect channels such as banks. because you don't have regulation. And that alternative solution worked quite, astoundingly. After we enacted this new real-time deposit and withdrawal system, the so-called kimchi premium, disappeared from 50 to almost 0. So we can, escape the complete ban. So it's like maximizing your, real benefit with minimal regulations, even though you don't have a formal regulatory framework. So the 2017 regime is still working in Korea, and the Korean government elaborated the system with travel rules and the further, AML and safety, and know your customer and the rules. And another instance, which could shed on, your experiences, the latest law, which is called the Act on Protection of Virtual Assets. And that Korea has presidential election in 2022, and Korea has 5-year in the president system. So new presidents announced around 100 new national agendas, and one agenda was the formulation of the formal comprehensive comprehensive regulatory framework for cryptos. So, and the crypto industry and investors were very enthusiastic about that announcement. It was like akin to the Biden administration's executive order for ensuring, responsible development on crypto assets, digital assets. So it was embracing, setting up Korea's version of MiCA Act, something like that. So industry was very, supportive of that, announcement. But as you know, in 2022, Terra Luna debacle, ensued, and there was multiple failures of crypto firms, which is culminated by the collapse of this FTX, and the mood has changed significantly. And this year, 2023, there was a great, large political scandal involving this crypto trading and investment, and the government and the National Assembly hurriedly, set up, enacted this new act on protection of digital assets, which is making, quite explicit that trading of crypto assets are legally, now it's a formal responsibility, and you have to abide by this, all these restrictive trading rules of crypto assets. So but this act keeps silence on the permission of the ICOs, and there are not many investment development aspects, but rather it is quite heavily oriented for the protection of crypto assets. So industry is not happy with this new law, but I regard this as another meaningful milestone. Once government has better better structure for investor protection, then government can be in the future can be more proactive toward embracing more comprehensive regulatory framework.
Yeah, makes sense.
That's overview of two major regulatory incidents Korea went through from 2017 to up to now.
Yeah, I see a lot of parallels between Korea and India based on what you said and even otherwise. Because when the RBI circular came in India in 2018, restricting buying and selling through bank accounts, and we represented exchanges challenging that. One of the arguments that we sought to make was that, look, a country like Korea, which also has capital controls, has dealt with this concern in a less restrictive manner, which is that it required banks to do a more extensive KYC for crypto providers. They said if you're a crypto provider, the bank has to do more KYC on you in so-and-so manner, whereas the Reserve Bank said it's not allowed altogether. that is one kind of stepping stone we crossed. And then it sounds like both India and Korea are in a similar kind of limbo, although different in some ways, but India has a restrictive tax regime, which is keeping things under check, whereas Korea maybe has this restrictive law. In both cases, industry is not fully happy with it, but it's not a ban altogether. So maybe that is a stepping stone towards a more conducive framework in the future. Rahul, coming to the Singapore regime and just diving a bit deeper on that, how do you see that playing out on the ground? I know there's a big backlog with MAS, etc. And also the stablecoin regime seems to be an opt-in regime. Any thoughts on that? Because regulation is usually a mandatory licensing.
So I think one thing that's very important is, when Singapore sort of initially made the amendments to the Payment Services Act back in 2019, the primary risk that they were looking at was AML and terrorist financing, right? So the obligations on entities was primarily AML obligations, terrorist financing obligation. As we've seen through the events, as Dr. Kim alluded to over the past year, there have been new risks that have come to the fore, right? So Singapore has now just finished consultation on consumer protection, right? Market integrity. These are all important. So I can expect that, over the next year or so, we will see new requirements come into place to deal with these new risks that have been identified. And that's a good thing, right? We don't want regulatory frameworks to be static. We want regulatory frameworks to evolve. So we do need to see, appropriate changes with regulations. But the key being that you're able to meet the protections that are needed and manage the risk that's needed while still, cultivating the innovation, right? We see that in Singapore where the blockchain industry, the crypto industry has had the chance to be innovative with the appropriate safeguards in place. When it comes to stablecoins, that's again a new area that's evolving, and that's why MAS has decided to take the approach that they've taken. Just to clarify, we've seen the consultation conclusions, but we don't have the final regulations yet. So the devil is in the details, but broadly what MAS has the approach that MAS is taking is that they will regulate single currency stablecoins, or SCS, that are issued in Singapore and pegged to either the Singapore dollar or G10 currencies, right? And they've been very clear that this is their initial approach to regulating stablecoins because that's where they see the risk, right? Now, that doesn't mean that stablecoins that don't fall within the definition of an SCS are not regulated, because they will still be regulated as digital payment tokens, or DPTs, under the PS Act as well, right? So you'll see that SCS, and the regulations for single currency stablecoins are basically, for a license for the issuer, right? So if you're an issuer in Singapore issuing a single currency stablecoin, that will be a regulated activity. So we'll see amendments to the Payment Services Act to see stablecoin issuance services added to that. But every other stablecoin does not automatically become unregulated. It's still within the DPT framework, so that will remain. And as MAS has said, as the market evolves and as risks evolve, they will revisit this framework. It doesn't mean that this is locked in, but this is the initial step that they're taking to regulate stablecoins. Now, I think you alluded to it earlier on. One is obviously having a regulatory framework in place and having a licensing framework in place. The other aspect is actually having a supervisory framework in place, right? I think that's the challenge we're seeing in Singapore right now. As I mentioned, Ripple, we have our MPI license in Singapore. It took us 3 years to get that license, and we're one of, I'd say, 14 institutions that currently have that license after 3 years. We know of there being hundreds in the queue right now, and the reality is that backlog is going to take time. Even with in-principle approvals, we're still under 24, right? And I think that's the challenge that we're seeing regulators face right now, is that they have strong supervisory responsibilities and capabilities for insurance markets, for capital markets. Do they have those capabilities for the crypto ecosystem? And I think they need to build up those capabilities as well.
Makes sense, makes sense. And I think the backlog issue goes across regimes which have introduced specific frameworks, including Dubai, Abu Dhabi. Dr. Kim, we stopped at how the Korean MiCA did not work out and how another law came in between. For both countries like India and Korea, which are somewhat in limbo, where do you see the next step now that the EU has set the trend of a MiCA? Do you see things globally going in that direction? Or do you see it more of existing laws being amended, or an SEC-like approach in the US where the regulator just interprets existing laws?
Yeah, 2024 is a year of election, so U.S. also has a presidential election. So we don't know who will win the next presidential election. But
So does India.
yeah, anyway, the new administration will bring new perspectives. So I think in multiple jurisdictions, major elections will take place, and we have to take that into account when we expect this the future of this crypto legislation. In case of Korea, when the National Assembly hurriedly passed this act on this, baked this new act on protection of investors, this crypto, protection of investor protection, the investor of crypto assets. The National Assembly made it quite explicit that they asked the government to do multiple studies, and they put it into the supplement to the law, and government is expected to conduct all these researches and feasible studies for multiple areas, and that there are a lot of these meaningful areas the National Assembly asked the government to do. For example, the very sophisticated definition of digital assets, the roadmap for introduction of stable coins, and the roadmap for have a full-fledged digital asset or something like that. So the industry is quite relieved to see this, the agenda list set by this National Assembly, and then the government will do this, complete this, the feasibility studies, and it will submit their findings and their suggestions to the new National Assembly next year, and that will be the starting point for having comprehensive regulatory framework for Korean crypto industry. So expectation is still high, and I am positive the next year we'll see some breakthroughs in Korea.
And is there public consultation as part of that process? People have the opportunity to submit comments or anything?
As I said, the government is asked, formally asked by the National Assembly. They have to, submit their suggestion. Then National Assembly will conduct this, seminars, and they will solicit public opinions for the government draft.
Yeah, that's interesting because there's a clear path forward where it seems like the law itself requires the government to carry out some research and come.
Yeah, it's a supplement set by the National Assembly.
Right. That's interesting because while we have our TDS as a stopgap, we don't have that clear path forward. But of course, we have the G20 discussions and statements in that regard that maybe something will emerge as a result of the G20 consensus. Rahul, the other thing that is interesting is the analytics tools by providers like Chainalysis and TRM Labs. There are obviously a slew of investigations across different situations, different countries on investigating crypto transaction flows. How can these tools maybe help regulators, and how can regulators leverage them? Have you seen any success stories?
Yeah, definitely. I think, the beauty of blockchain is that one is obviously the immutability, but also is the transparency, right? Anyone in this room can go to a block explorer and see transactions happening, right? We don't have that same level of transparency in traditional markets, if you think about it. So there is this sort of, this ability. Everyone, is scared of blockchain because, it's pseudonymous. But yes, it is. But there is that level of transparency. And what these analytics tools do is help you to determine, as you said in investigations, what are the flows, right, from institution to institution. So there's TRM labs, there's Chainalysis, there's a whole host of, tools out there. I do not represent any of them, just to be clear. This is, just my impartial view, is that, and all of them provide a useful service, which is, we talked a bit about the supervisory aspect, right? When you move in from not just regulating, but to supervising, and then, compliance, and then, investigations. These tools give not just the industry, but also regulators the ability to see what's happening on chain. And those are very, very useful sort of tools that regulators can leverage for their investigations. So across the region, not just, in Singapore and Hong Kong and Australia, we've seen not just the regulators using these tools, but also the police, right? And the investigative agencies are also using these tools because at the end of the day, they're the ones that will be investigating any potential crimes that occur. So it's important to upskill and be able to use these tools for your supervisory and investigative requirements.
Yeah, absolutely. And in my experience, the area where law enforcement is most concerned is where there's fiat money converted to crypto, and then a withdrawal to an unknown wallet. There's always, that's where the investigation is focused on who is behind the wallet and where has it gone. So obviously that's an area where maybe if law enforcement adopts these tools, there'll be better headway investigations, and that's something that globally other regulators have had success with. I think we're out of time. Thanks everyone. If there's just one question, we can take it, but otherwise we can wrap up in the interest of time.
Sure. Any questions, guys? This room is filled with lawyers today. So any questions for the panelists before we let them go? All right, we'll take that as a no. The panelists are going to be around. Please feel free to catch up with them separately as well. Thank you so much, Dr. Kim. Thank you, Jaideep. Thank you so much, Rahul, for the insights. Thanks for your time.
Thanks, everyone.